Welcome to It's the Economy. Earlier this month, Reserve Bank put out draft rules which said a bank and its subsidiary or group company cannot do the same activity. More specifically, there should be no overlap of lending business between banks and their group companies. So, does this mean Kotak Bank and its group company Kotak Prime cannot give car loans together? That won't be allowed. ICICI Bank, ICICI Home Finance, both give home loans, won't be allowed. HDFC Bank and HDB Financial, both give personal loans. And then you can go on, PNB and PNB Housing, Can Bank and Canfin Homes. Will all this not be allowed? I have with me two experts, Suresh Ganapathy, banking analyst at Macquarie Capital Securities, and Harsh Vardhan, the senior advisor at Bain Company. Suresh, just state the problem to our viewers. What are we staring at? And in any case, 2 years are there, right, before the rules apply?
Yeah, sure. So I think the message is pretty clear that the Reserve Bank of India doesn't want any conflict of interest, and they don't want competing businesses to be done at the subsidiary level. So very clearly, they're trying to say that you differentiate these businesses. And now the challenge here, which is not clear, is basically whether you differentiate the business purely in terms of product, or you have a case and argue that you can even differentiate in terms of customer profile. Where one institution can argue that, look, the kind of loans that I am trying to do through my NBFC, I would have anyways not done through my bank. And therefore, this has to be treated separately. Again, that's where the regulatory clarity is not there. And that's what the banks are going to try and ask Reserve Bank of India what needs to be done. As far as we are concerned, based on our initial reading of the circular, many banks will either have to sell their NBFCs or stop doing certain businesses through the NBFCs, or merge the NBFC with the bank, which is making the problem a little bit more serious at this point in time. Yeah.
Okay. Mr. Harshvardhan, can you elaborate? What does RBI sense mean? Like, for instance, can Canfin Homes lend to, say, non-salaried categories? And can bank lend to only salaried people? Or affordable homes? Can such distinction be made? Likewise with Kotak Prime and Kotak, can a distinction be made between whom you are addressing the loan to?
Yeah. So Latha, the way I read the circular is that they are making this distinction on the basis of business, neither products nor customers. So if you define housing finance as a business, then they are saying you can do it in only one. Or if it's corporate lending, you can only do it in the bank or in the subsidiaries, not in both. So my view is that it's absolutely clear. Now, historically, they made an exception for housing finance. So I don't know whether that will continue. But to take a step back, Latha, this began, if you remember, when they issued the new bank licensing guidelines in 2012-13, remember? Because that was the first time this logic of not allowing subsidiaries to do something that you could departmentally do within the bank was first kind of explicitly spelled out. And since then, I think RBI has been actually reiterating this. And this circular, I see it as a further sort of re-emphasizing that logic that they had articulated that time. Now, a lot of these banks that have these NBFC subsidiaries predate that time, meaning they were set up a long time ago.
Yeah,
and so
like HDB was set up before the rules.
Yeah, all of them. In fact, since that time, and you should check facts on this, I'm not 100% sure, but I don't think after this 2013, RBI has allowed any bank, any NBFC registration. So all those that were set up before that, they have kind of allowed to continue. Now they are effectively, in my mind, saying, look, I'm going to give you 2 years within which you decide what you're going to do with this. Because after that, either, as Suresh was saying, you merge it with the bank or stop doing some businesses or conduct it in one or the other.
1 minute, Mr. Harshvardhan, my bigger problem is, will they be okay if I just listed it? For instance, HDB, if it is listed, I have no problem. Can Bank is listed. So Canada Bank and Can Bank can do the same business. Or even if you are listed, if I have a 75% majority in you or a 50%, then you will be, treated as a subsidiary.
Then they are saying, if you list it, but bring the bank stake down to less than 10% of its own capital of the listed country, then they are okay. Because then it's a pure financial investment. But you can't say I've listed it, but I still hold 51% and continue to do this, because then it's your subsidiary. That's the way at least I read it.
Oh, really? Suresh, then there is problem, na? HDB Financial, I don't think HDFC will be able to even, I mean, they're obviously on the path to listing, but I don't think they're looking at 90% OFS, 90% sell-off of equity.
Look, I think
for that matter, Can Bank, PNB, yep.
Yeah, Latha, that's the problem here, right? It's like a similar circular to project finance and ECL norms. On one hand, you're saying you have to do project finance, and then you will come with ECL, which where the project finance is going to be a subset of ECL norms. Same is the case here. On one hand, you have an upper layer NBFC which is forcing you to list, and then you have got another norm which is coming and conflicting, saying now you will have to sell it off, effectively bring it down to 10% stakes. So I think these things are a little bit more confusing. So let's put it this way, that tomorrow HDFC Bank decides to keep it as a 100% owned subsidiary, right? There is no compulsion to list or merge with itself. Then why go ahead and do listing because of the upper layer NBFC rule? So in January, you come and list because of an upper layer NBFC rule. Then the new regulations come in and HDFC Bank takes a call that I will merge with itself. I mean, it just defeats the purpose,
Doesn't make sense.
right? So it just doesn't make any sense. In my opinion, the way I read here is that it's a waterfall process. The first step is to detect whether it can be or should be a subsidiary or not by doing competing businesses or not. Once you pass that check and then you realize that no, you can continue to be a subsidiary, then the upper layer NBFC norms will apply and therefore you will have to list. So the first step is competing businesses and the next step is listing as per the upper layer NBFC norm.
Now, I'm still not sure whether after the listing, what stake you will be allowed to hold. Will you be allowed to hold just less than 50?
No, the second
Mr.
step
Harshvardhan?
comes in only when you're not a competing business. Sorry, go ahead.
They have also laid out the investment norms, right? Where they talk about 10% of banks. Why would they make it? Because my sense is the clear intention is that if you, even if list it and wants to create an arm's length entity, then you better go below 10%.
No, sir, it doesn't say 10. They say banks' investments, including an allied businesses, capped at 30%. So I think...
No, for non-financial. I mean, it's again complicated. So I think 10% of banks' own net worth, 10% of the listed investing companies' equity, and so on and so forth. But there is another issue, Latha, if you allow me, I'll point out.
Sure.
There is this whole NOHFC construct, right, which is for businesses that are non-banking businesses. Now, this is also something that they brought out in the new bank licensing. Now, the underlying regulatory logic is very clear, and this is a globally accepted logic that banks' capital should not be impinged on by non-banking risks.
Yeah,
and so banks cannot. Now, the issue in India, a lot of banks own insurance. Now, insurance risks are very different from banks. So like you have done it for these businesses, common overlap businesses, if you insist on that logic of NOHFC as well, then these big banks will have to move the insurance stake into some holding company. That is even more complicated, isn't it?
Oh, yes. So HDFC Life, SBI Life, all this will be an issue. Suresh, any thoughts?
Yeah, but Latha, I mean, there's so much of contradictions here throughout the process. If indeed the objective was an NOFHC norm, while HDFC and Kotak, all of them obviously have these life insurance and NBFCs way before this new concept came in, why was IndusInd Bank given an AMC license? I mean, they got a license as late as 3 months ago, right? I mean, if you want to move towards an NOFHC norm, you should have not given a license to any of the new entities to have this kind of a structure. Okay. So it is just very conflicting in the way certain things are being approached at this point in time. Therefore, we need more clarity.
Yeah, the advantage is it's draft. So maybe we will get some clarity probably post November 30th after they get all the, November 20th, I think, after they get all the comments. Maybe Reserve Bank will come with a little more clarity, but it is just very confusing. Mr. Harshvardhan, would you want to add anything more in terms of what they speak about investments in AIF? See, banks' investments, including in allied businesses, capped at 30%. Banks shall not make any investment in Category 3 alternative investment fund. Over there, is there anything that you will worry about among...
Category are essentially hedge funds. So I think RBI probably has risk concerns there. And so they just don't want banks to do that. And they already issued a circular about, not investing in credit as which are lending to your own borrowers, etc., etc. My sense, Latha, is that all of this has been fundamentally motivated by concerns of regulatory arbitrage. Why is this issue about subsidiary doing business that banks can departmentally do not being permitted? Is that RBI probably senses that this is one way of banks that are kind of arbitraging between regulations. Let's take a business like loan against shares. Banks have severe restrictions, but an NBFC owned by bank can do it as much as it wants. And ultimately, as I said, the RBI probably perceives that The risk comes to the bank as a owner. They are the providers of capital. Many of them even lend to their own NBFCs.
Yes.
And look, I
Absolutely.
always believe that RBI sees more granular and richer data than you and I see in the public domain. So maybe they are seeing something.
Yes,
Which
fair enough.
Yeah.
Oh, yes, they wouldn't put in rules unless they are seeing a path to
Exactly.
danger.
And remember, another thing is the incentive of arbitraging regulations is the strongest when underlying banking is under liquidity pressure, which is the case right now.
Okay. Yes.
So
Okay.
maybe that's also one of the reasons why this probably is the time that they have brought out. I see this circular just as a clarification of what they have been saying for a while now, for at least last
Okay.
10 years.
Yeah, but more clarifications are needed, sir. Suresh, last
Yeah.
thoughts?
Yeah, look, I think, I mean, look, all these large banks, Latha, have some of these large NBFCs. So there are some serious implications coming out of it from the circular in case they really have to divest or merge or list or whatever they have to do, because a reasonable proportion of value is coming from some of these NBFC companies, and therefore it's going to be a tougher process for all these banks with these existing entities, because they will really have to rechange some of their structures in case the Reserve Bank of India is hell-bent upon, let's put it this way, going through the circular in the current shape and format. So maybe some exemptions are being done. Otherwise, it indeed will cause quite a lot of flutter with respect to the parent company shareholders for sure.
Okay, yeah. So the advice from both our experts, Harshvardhan and Suresh, is watch the space. We have to look for the clarification and Reserve Bank's intent because it can mean a lot to a lot of listed NBFCs and listed banks. Maybe they will get more time to either divest completely, bring it below 10%, or absorb it, completely merge. But watch this space. It is very closely linked to the share prices of the banks and NBFCs themselves. Thank you very much, Mr. Harshvardhan and Suresh, for adding clarity and telling us where clarity doesn't exist. Wrap up on Bazaar on that note. Chartbusters coming.